This is Matthew Cratter from Trader University, and today I want to talk about the huge momentum stock reversal that we saw yesterday, as well as some interesting candlesticks that I think you should know about, particularly the bearish engulfing pattern, as well as the gravestone doji. If you're interested in learning how to make money in both bull and bear markets, or just want to see what I'm trading or investing in, be sure to hit that subscribe button. So yesterday, early in the morning, I put out my favorite momentum stocks list for the week, and I think I completely jinxed the market. We got a very, very big reversal yesterday that I want to talk about, in particular in momentum names, in tech names like the QQQ, which is the index, the NASDAQ 100. I first want to introduce you to the bearish engulfing pattern if you haven't seen this before. It's this candlestick right here, this red candlestick. And the way bearish engulfing works, let me actually scroll in a little bit more here. So the way bearish engulfing works is that you open above the highs of the previous day, and you close below the lows of the previous day. So what happens is the market gaps up. If we have a candlestick right here, the market will gap up, and it will often explore a new territory, and then it will do a very sharp reversal, trapping the bulls, especially the bulls that have just entered on that day. Now, this normally happens at the end of an uptrend. It's a reversal signal. You don't see these near the beginning of them, but you want to see them at the end of a big up move, especially when there's been a lot of bullish sentiment, as we saw. So again, we certainly don't have a crystal ball. We like to trade the price action as it unfolds. But what I saw today was actually, what I saw yesterday, this reversal was quite disturbing. As a result, I got out of all my momentum stocks, except for Tesla, which is more of a long-term holding. I exited them all at various points during the day. Now, this is not investment advice, not telling you what you should do, but typically August, September, we're entering the kind of bearish, volatile part of the month, part of the seasonal calendar year. We have the Fed balance sheet contracting. It's actually been contracting for a couple weeks, as we've been pointing out. But I think especially when it shows, I'm less worried about a contraction until it really shows up in the price action. And what we saw in the price action of momentum stocks yesterday was extremely disturbing from a short-term perspective. Obviously, I think the Fed's going to keep printing money. Stocks are going to go much higher. But I think we could have a couple down months here, especially seasonally. And it's not really something I want to be part of in my trading portfolio. In my investing portfolio, I'll hold on. I still have the gold royalty stocks. I still have Tesla and some other stocks, especially the dividend stocks that you guys know about who've subscribed to my courses. But for these momentum names, there's no point being in momentum names when they're not going up. They can reverse very, very hard, and they can crash just as quickly or more quickly than they went up. So we have the bearish engulfing pattern here. We can see it in a bunch of stocks. Peloton was one that we talked about. Very, very big bearish engulfing pattern here. I think Peloton, the short-term top is in. Obviously, could have a lot of growth going forward. But when you see this kind of reversal, or when I see it, I want the market to prove itself. So if we start trading above, if we start trading at new highs here, if we reverse this fairly quickly and we're back off to the races again, I don't mind as a trader getting back in at higher prices. This can be frustrating, but if you don't allow yourself to do this, what will happen is you'll miss out on very large runs because you'll be sort of anchoring to price and unwilling to get in at a price, or you'll have trouble psychologically sort of overpaying, quote unquote, overpaying for a position that you entered or that you exited at a lower price. So a lot of reversals here. We had it in Facebook as well, which is now gapping down. Google was another momentum stock we talked about yesterday. What else? TDOC, I don't think was. Yeah, TDOC, a bullish, bearish engulfing candle. When you see all the stocks having the same form, that's when you need to really worry and wonder if there's sort of a sector rotation going on. In Tesla, obviously, really big reversal. Not quite bearish. Not quite a bearish engulfing because it did not finish below the lows. And it's actually showing some good relative strength today. Again, this is not a trading position for me. If I were trading it, I would probably just drop out because I think the short-term top is in. But Tesla surprised us many times before, especially surprised me So that's one reason I'm holding it just as a long-term investment. NASDAQ exchange we talked about, which really benefits from high trading activity. And then finally wanted to show you, let's see what SMH did, the chips. See, we got a big reversal pattern in the chips. In the semiconductors, we had talked about LRCX yesterday. Not quite as bad of a reversal pattern, but definitely trading lower today. And then the final candlestick pattern I wanted to show you guys is Domino's Pizza was another one we talked about, and this is really unfortunately a classic example of what's called a gravestone doji. Gravestone doji, you basically open and close at the lows of the day, so it gives you this really long upper wick as we are seeing right here. And what this means is that buyers were rejected, sellers came in very strong at these levels, and the stock really didn't make any progress during the day. It looks like it still closed up a little bit, but whenever you see these long upper wicks, that's a sign of buyer rejection. That's a sign that the bears are taking control. And so it looks like Domino's Pizza, obviously not really a tech name, though they do rely on sort of network management, and they are increasingly a tech company, but they've been trading as a momentum name. And so they're putting in what's even more bearish than a bearish engulfing candlestick. This can be quite a reversal pattern when you get a gravestone doji, especially coming at the end of a long upturn like this. Again, I'm happy to hop back in on this if it shows some strength. But it looks to me as well that Domino's Pizza has put in a top. And again, if you are investing in these, if you're trading in these, you're going to have to make up your own mind. You're also going to have to decide on your own risk tolerance. And you're going to have to decide, most importantly, on your sort of time horizon and holding period. If you're investing in Domino's and Tesla as long-term holds, you shouldn't be paying attention to price action like this. It's not important. You should be paying more attention to the company's future prospects and sort of forward revenue guidance, etc. But for momentum trading, I think candlestick formation is very important, and especially we're at sort of a seasonally weak time of the year. As I said, I've been quite surprised that stocks, especially momentum stocks, have been as strong as they have been. We can take a look at, I guess Momo's the wrong one, but momentum stocks aren't normally this strong during the summer. And so when you get a reversal like this, it should be quite hard. And it looks like, even as I've been talking, NASDAQ 100 reversing very hard here. What it did yesterday, where it was up 2% on the day and then closed down 2% using this bearish engulfing candle, very, very bearish signal. So be careful out there. Make sure you're trading with stops. Momentum stocks should always be traded with stops, and you have to be flexible. You can't fall in love with these stocks because they can rip your face off on the way up and also on the way down. But I think we've definitely seen a huge stock market reversal here, and probably headed lower in the coming weeks. Obviously, we will continue to follow the price action. If there's a lot of stimulus, we could definitely see a reversal here. But what I suspect is that we get a stock market sell-off here for a few weeks. The Fed is then going to have to re-expand its balance sheet, and will probably enter a much more bullish period of the year, especially in the run-up to the election. I'm expecting the Treasury general account to be really spent down, and the kitchen sink, everything thrown at the economy and the stock market to make it go up in the weeks leading up to the election. Please hit that subscribe and like button if you found this useful, and let me know your questions and comments in the comment section below. Thanks a lot for listening, and I'll see you in the next video.